The Accunet Mortgage and Realty Show is sponsored by Accunet Mortgage, an equal housing lender, NMLS ID 255368, and Accunet Realty Advisors, which is a separate company from but still affiliated with Accunet Mortgage.
Welcome to the Accunet Mortgage and Realty Show, getting you inside information on buying, selling, and financing your home with expert advice from Accunet Mortgage and Realty's Brian Wickert on WTMJ.
Good morning and welcome to the Accunet Mortgage and Realty Show. I am your host this morning, David Wickert, Chief Millennial Loan Consultant. And joining me this Sunday, dapper-looking Tim Holdman, Loan Consultant at Accunet Mortgage. Good morning, Tim.
Good morning, David. Glad to be here.
Glad we could sneak this show in before the Green and Gold kickoff later this afternoon.
Yeah,
I will be
crossed.
clutching a cold beer in angst probably all afternoon, but that's just me. If you have a question or a comment, you can reach us on the Accunet Mortgage Talk and Text line, the new number, 855-616-1620, 855-616-1620. If you'd like to chime in, happy to take your questions on the air or follow up here yet this week. But wanted to kick off today's show with a little bit of a rate roundup because, hey, it's 2020 and interest rates remain favorable.
New year, luckily, not new rates.
Still
low
the same
rates.
great rates. And also maybe just try to make sense of the international news and how that's impacting interest rates. And then in this segment, at least, I would like to pounce on our friends at Schmicken and their recent news. But we're also going to cover in this show a conversation about it's the turn of the new year and good houses are already going too fast.
Yes, home buying season is here, ladies and gentlemen.
And the stories that go with that. So what I wanted to, but I'm going to start with rate roundup. So for those who don't work in the mortgage business, this time last year, we recall that interest rates were darn near a full % higher than what they are right now.
Tickling 5%.
Yes, tickling. I like that. Good verb. And thankfully, over all of 2019, rates plummeted over a full %. And so if last year we were tickling 5%, thank goodness that here at the start of 2020, Accunet at the close of business on Friday could offer on a 30-year fixed-rate loan 3.875% with an APR of 3.9, and that is just with $495 of cost.
And that's total loan cost, David, including all the regular stuff every lender needs to pay for, including appraisal, title insurance, closing agent, et cetera, et cetera.
The construction materials for your mortgage, the bare necessities. And as kind of over the new year, the turmoil in the Middle East has, because don't forget, folks, that kind of scary / bad news in the world or economic related is good news for interest rates because the movement of money flows from riskier assets like stocks, for example, and plows back into, quote, safer things like bonds, mortgage-backed securities, and U.S. Treasuries.
Right.
And so that's been a nice little gift here to start the year. But a headline I read this past week, also the trade war phase 1 is actually going to get probably signed here in the next couple days, weeks. China is sending over their chief trade negotiator to sign phase 1. And I read that the UK Parliament also approved the Brexit plan, so Britain's divorce from the rest of Europe is going to be not the ugly, knockdown, drag-out version we thought it was going to be, that we were hoping was going to keep rates low for a long time. So all the smartest people think that interest rates are going to be favorable for all of 2020. Boy, do I hope so, both for Accunet's sake and for our home shoppers and home owners. But there does seem to be kind of this slew of good economic news coming down the pike that perhaps when anything with Iran or Iraq settles down might make everybody more comfortable. And I would not be surprised if rates kind of ticked up away from us once that bad news, the dust settled on all that.
A little bit. And, you know, I've talked to a lot of people, David, who think, well, rates have been so good. I want to wait and see if they get even lower. I think Brian and you and my own opinion is why gamble and try to just get a little bit better when rates are historically almost at an all-time low right now? Lock that in if you're thinking about a refinance, or obviously if you're looking to buy a home, it's a great time to do that.
Yes.
If rates get lower, we do have tools in our toolbox to help you take advantage of that, even in the process of already having locked in a rate with us. So if you're thinking about
the best of both worlds.
Yeah, if you think about
Bird in the hand.
If you want to wait, I mean, that's up to you, but we would not recommend it. We would recommend locking in what we have available today.
And locking in a possible purchase or refinance at a reasonable cost, thanks to your friends at Accunet Mortgage, because lo and behold, like a delayed Christmas present, the headline came out that our friends at Schmocket Schmortgage and Schmicken signed a new deal with the football league,
the National
Football League, that they are going to be the official mortgage
exclusive
company.
Mortgage sponsor of the NFL.
Fantastic.
4-year contract, first time NFL has ever had.
And I'm sure that did not cost them any money.
No,
and
probably
so
free.
I went on and I just cooked up, and I am not kidding you. So I shared with you Accunet 3.875 on a 25% equity, $200,000 loan, escrowing for taxes, all the right stuff. If you want the same mortgage from our friends at Schmicken, it's an eighth higher at 3.99%, and it is, wait for it, $5,300 more to get the same pile of money
in cost.
That's
right?
like buying a Ford Taurus for $5,000 more because you want to. So please, 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 they are going to infiltrate your football viewing over the next 4 years. When you see the rocket, think of your friends at Accunet, because we're going to help you save money on that.
When you see that commercial, just know that's contributing to higher costs that you would pay if you went with Schmicken.
All right, so that's your rate roundup here for this Sunday. When we come back, Tim and I, we're going to jump into a, man, I wasn't ready, and then that house was gone so quick story here to kick things off. You are listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Don't just find a house, find your home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
Good morning and welcome to the Accunet Mortgage and Realty Show. I'm David. That's Tim.
Good morning, David.
Subbing for Dad, who's down in sunny Florida, but happy to anchor it down here back home in the wintry wonderland of Wisconsin.
Millennial Mortgage today.
Mortgage. So, as happens every year, people come back from the holiday, and that first Monday after they're done digesting, overeating, and the too much that they had to drink, people just like raise their eyes and they're like, oh my gosh, I want to buy a house this year. And that happened like clockwork this first Monday, the 6th.
Even January 2nd, they got out of their
slumber. Well, it's because people,
looking.
As the holidays come around, they just like look at each other. They're just like, honey, I want to buy a house next year. But I don't want to do it because I'm baking, Christmas cookies.
Right.
So, but come the first of the year, hey, you got nothing else to do. And so the hunt for good homes is on. We're not waiting for spring. It's on right now. And so, Tim, you were talking with a borrower who I wrote down your words. He said, I wasn't ready, and then it was gone.
Yeah. So this past Wednesday, connected with a borrower who's looking to buy a duplex in Waukesha because he actually has a lake home that he wants to keep as a second home, but he works in Milwaukee and was renting in Waukesha. And he realized...
Had he already sold a previous primary residence here in southeastern Wisconsin?
Maybe a couple years ago, but not recently.
Okay.
And, he realized, I don't want to keep on throwing away this rent check every month if I can help it. And his idea, and maybe this isn't for everybody, but this guy's idea was I want to buy a duplex, live in one unit, rent out the other unit to help offset my own living expenses. And, at the end of the day, he'll obviously net a lot of that back when he sells the property. So, again, maybe not for everyone, but this guy had the wherewithal to want to do that. And he said, Tim, I made the mistake of casually looking before I was pre-approved. I saw a house, and 2 days later, I went to try to schedule a showing, and it had an accepted offer on it. 2 days in the first week of January.
Wow.
And he's like, all the good houses, they're going really fast. I want to be ready. And
this is a real person. This
Yeah.
isn't just like a ploy you're using to tell a story we've already told, right?
No.
This is a real person.
This is the classic example. And through our discussion, we determined we could get him rock solid pre-approved, and he really liked the sound of that because I said, John Doe, here's the reason why you want to get rock solid. All the stuff you got to get us documentation-wise is stuff you're going to need to get any lender once you do have an accepted offer,
right,
anyways. So you're taking care of that ahead of time. And then that $2,000 money guarantee assurance that's on the first page of the Rock Solid, basically it says that if you get an offer using our Rock Solid pre-approval, and if we as the lender screwed up in some capacity, we would pay the borrower $1,000 and the seller of that property $1,000 for the inconvenience of having our financing fall through. And I said, if you're in the seller's shoes and you have 3 or 4 different offers,
especially if you're getting an offer, multiple offers probably within 2 days.
Exactly. You are going to pick the one from a guy who did all his homework ahead of time with the lender and knows for sure that they can bring the big bag of money to the closing table, call the mortgage, to get the seller the money they're looking for. He really liked the sound of that. We don't charge anything extra for that stronger, fully verified pre-approval.
We just want people to win.
Yeah, because selfishly, we want people to win because we want to create mortgages for them, and that's not happening until they get an accepted offer.
Right. Wow. So it sounds like he was hot to trot on getting that. What was that? January 8th. He's not waiting for March 8th to go look for a house.
Yeah, and it took him losing out on one house that he really liked to realize the importance of it. So hopefully the people listening to this show can learn from his pain and maybe take those steps before they get their heart broken by losing out on a house they really wanted.
I did, because part of his difficulty is a lack of inventory. So I did a flash reading. I think, did you already say he was looking in Waukesha, city of Waukesha, which
correct.
is not a small town by any means.
Nope.
Okay, if you are looking for a home at a reasonable price between $200,000 and $350,000, if you want a single-family home, you have 56 homes to choose from as of here right now as I'm speaking. Oh, but wait, 27 of them already have accepted offers.
Right. They are under contract.
Yeah, your inventory is really only 29 homes. And a third of them are kind of like fugly. So,
left over from last year maybe.
Yeah, just because they're available doesn't mean. So you got 29 single-family homes. You would like to shrink your pie a little further and buy a duplex within Waukesha City proper? There are 6 of those available. Yeah. Wait, 3 of them are already under contract. So you can pick, if that's kind of your sticking point, is that specific place, that specific type of property.
Not to mention if you want to get more granular with number of bedrooms, number of bathrooms, above ground square footage. I mean, there's things that you can do to narrow your search, and the inventory is tight, and there's a lot of people hunting for those houses.
Dad has pointed out, and the numbers bear out, that listings suddenly sprout forth here at the start of the year. But guess what? People are looking here in January. So news to sellers, if you would like to stick a for sale sign in your yard, there are people out there looking
you will get
right
interest.
now.
You will get
They're probably
interest,
Vikings fans if they're looking today, but that's okay. Their money is still green, so all good. Okay. When we come back, I want to tell another story about if I sell my home in time as I buy my next house, balancing that act of getting from your old home to your new home. You are listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Getting you through the home buying process. Welcome back to the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
And a good Sunday morning to everybody. We are tackling purchase and pre-approval scenarios here at the Accunet Mortgage and Realty Show. And I wanted to, a common question we get, because there are people called not first-time home buyers. They're, second, third, 10th home buyers. Okay, anyway. And the common question we get is, hey, how do I get from my soon-to-be old house to my next house? Because, hello, we're human, and not having to move twice is nicer.
Would be great.
than getting to move once.
Yep.
And so if the math comes together, we really like being able to help put together a plan where, yes, Mr. and Mrs. Borrower, we can help you get into your new home without having to sell your old home, and then you can take your sweet time selling your old home.
We know you're going to sell it eventually. It's the order
you have
of
every
how it
intention
happens.
of.
Yeah.
So Tim, you had a borrower who were kind of. It's all going to come down to the actual dates, and we're kind of pursuing a dual execution, a dual strategy for, well, will you sell your old home on time or won't you?
Yeah. So I'm working with a couple who the scenario you described, David, fits them to the T. They own a home right now, and we got them pre-approved, and they're like, hey, Tim, it would be really great if we could buy this next house without having
I only want to unpack my underwear once.
Yeah, without having to first sell our current home. And aside from the human and convenience aspect of it, there's also some strategy to it, which is, Brian says this all the time, having the fancy word for it is called a home sale contingency.
Oh, yeah.
He calls that the kiss of death on a pre-approval letter, because sellers like to know that you can go out and buy their house before you have to sell your house
without worrying
first.
about the person who's going to buy their buyer's house.
There's just one extra transaction where stuff can go wrong, which it can create a domino effect. So, strategic reasons for wanting to be able to buy a home first, not to mention the human aspect of not having to move twice.
Right, you got to win. Yeah, so there is the human aspect of not moving twice, but also you got to win that offer in order to have the problem of moving twice, maybe.
So there's two key factors that can make this work. Number one, your qualifiable income, a.k.a. how much money you're bringing in every month.
Is that a word, qualifiable?
In the mortgage world, it is.
Now it is.
Your income has to be high enough to support essentially the cost of owning two properties simultaneously. Because in the mortgage world, and this doesn't necessarily make sense.
Because we're mean.
Yep. In the mortgage world, if you own your current home the day you buy the new one, even if you're selling that home tomorrow, if you're selling that old home the day after you buy the new one, it doesn't matter. At the time of closing, we have to prove that you have enough income to carry the cost of owning both properties. Because what if the people that are going to buy your home get struck by lightning on the way to that closing,
right?
Or
lose their job?
Yeah,
I mean, on a real life, or get injured. How's about that?
Yeah,
I got
have to go on
injured
disability.
I can't go to work.
Yeah, so a lot of things can happen. So that's one of the big factors: is your income high enough? The second factor is a lot of people, their equity, their money that they would use for the down payment of the next home is tied up in their current home.
Right.
So how do we pull that money out of the floorboards, using one of your bad jokes, David? How do we pull money out of the floorboards of their current home?
Go to the ATM called your house.
Yep, to throw down as the down payment for the new home. So there's a couple different ways we can do that. We can partner with sort of a collaborative source to put together what's called a bridge loan, which is basically borrowing against the equity in your own old home to go use for the down payment, knowing that you're going to pay off that bridge loan pretty darn quick after the fact when you sell your current property. In the case of my customers, he's actually a banker for a large bank, and we happen to win their business for the mortgage because we can do their mortgage for cheaper than his own employer can. But aside from that, he has more general banking knowledge than your average person, I would say. So he had an open home equity line of credit on his current home that he had there at a zero balance.
Sure.
Wasn't using it, but he had it in case he needed it.
And now he needs it.
And now he needs it because he's basically going to use that in place of a bridge loan and draw some money on that for the down payment, knowing that the home equity line is going to get paid off when he sells that house later on.
And it's all borrowed money anyway.
Correct.
He already has the facility to borrow it open.
Right. Yeah, so it's going to work out well. Everyone's situation is a little bit different. That's what makes my job really fun. But, in this case, there are several different ways we can make it work where you can buy your next home before selling your current home.
And he's also trying to actively sell his current home.
He's listing it. I think he listed it 2 days ago. And there is, to your point, is if he does get a buyer that is willing or able to close on
that morning,
buying his old home, the day of or the day before my client buys his new home, then we can revert back to the game plan. We don't have to worry about the bridge loan.
Yeah.
Don't have to worry about any of that because he can immediately get all those proceeds out from the sale of his current home and use it as the down payment. So we can kind of actively pursue both strategies simultaneously for a certain point.
And it just comes down to the timing.
Exactly. Timing.
Better to have the safety
everything.
Blanket of I promise we can get this done for you at least one way.
Yeah.
Rather than hoping that a buyer pulls it together in a lickety-split kind of way.
Right. And it's easier to switch game plans to I'm selling my home before buying the new one. That's really easy to make that switch. It's harder to bank on that strategy and then realize you can't get it done and then scramble to put together the plan B of how do I get the down payment together
Right.
for this new home that
Right.
I'm buying?
All good stuff. Getting people into new homes here in 2020.
Helping you find a place to call home. This is the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
Thanks for sticking with us here on the Accunet Mortgage and Realty Show. I'm David. That's Tim.
Good morning. Go Packers.
And amen. And we're subbing here for Dad, who's down in sunny Florida, or at least I hope it's sunny. And speaking of Dad, I wanted to talk about the bank of Mom and Dad, if only because for those who haven't yet cracked open their year-end financials, the S&P 500 stock market returned darn near 30% in 2019. So I hope everyone's feeling a little bit more flush here in 2020. And in mortgage lending, the second best source of down payment, right after
Checking and savings account.
after your checking and savings account, is gift. And we are the kings and queens of helping borrowers line up that gift at Accunet Mortgage.
And this isn't gift from your drinking buddy on Friday nights. This is gift from blood relative
Right.
or relative by law, like in-laws.
Yes. And so not only for purchases, but gift is also a legitimate source of funds for a refinance. And we were helping a customer this week who had the good problem of, Tim, I'm going to steal your thunder here. Hey, when my son's appraisal comes in, let me know, and I'd like to give a gift of money to help him get down to 20% equity.
Yeah.
To avoid that PMI. And that is kind of rare, if only because on a lot of refinance transactions, we help folks not have to bring any money to closing.
Yeah. Less common where they go in with the goal in mind of intentionally bringing money to closing, but in this case, it's going to work out great. And I think on this radio show a lot in the past, David, you and Brian have talked about gift for down payment, and that is great. But what people maybe don't think about as much is if it's just a timing thing, and maybe mom and dad or the relative, to be named, can't get that money together in time for you to buy the house. Guess what? You can still buy the house, and then maybe if the environment is right, maybe that gift just comes later, and then we do a refinance to pay down the mortgage, and maybe due to the nature of home values also increasing at the same time, once the appraisal comes back in, we can really fine-tune the game plan of how much money is even needed to help you meet your goal of eliminating PMI, lowering your monthly mortgage payment. So gifts for refinance, just as doable as gifts for down payment to buy a house.
Although I can't help but put on my retired financial advisor hat and be like, well, Grandma, Grandpa, congratulations that you're in a place where you can give Junior, $20,000 that you'd like to apply to their mortgage. But it's like, well, what else could you do with that $20,000 instead of stick it in the 2x4s or the floorboards? To each their own.
Correct.
I just know if, and you don't want to, not be thankful for a gift from a relative on a purchase or a refinance.
Absolutely. Yeah.
I just am aware that cash is king, especially as you're either getting into or just settling into a new home, for example, and a new mortgage payment. To that end, we in the realm of gift, we have a story this week, a friend of the Accunet family who was in the financial position to be able to help their kid buy their next home and help them pay cash. And in a super tight market, we did our little flash inventory, just for example, in the city of Waukesha. If you have the means and the relationship where a relative can help you maybe pounce on a property for cash.
We call our rock solid pre-approval the next best thing to a cash offer.
Right, but it ain't cash.
It ain't a cash offer. That is the best offer you can put in front of a seller.
And this can be whether it's a very tight market, like, hey, there's only 5 of these houses for sale and we need to blow these sellers away with a cash offer.
Right.
Or in this example, the timing just wasn't going to work out. We talked in the previous segment about selling my old home, getting into my new home. Well, sorry, the income doesn't support both homes. And so one of the ways that we've helped moms and dads and grandmas and grandpas is for them to go record a mortgage on the new home so that when the time comes that the owners, so you're basically the bank of mom and dad, you've recorded this debt against the home.
It's a lien against the property.
Correct. Yeah. So that when the time comes, what we're helping our borrowers do is refinance the mortgage of mom to help mom get her money back. And so it's not a gift because you are expecting your money back, but you're using your funds to help your kids or grandkids or nieces and nephews get into that next home. So that's kind of another twist on the whole gift idea. And so if you, as a listener, are contemplating a strategy like that, we would love to be a part of that game plan, if only because it does require some nuance kind of above and beyond just the regular, like, let me help them with a down payment, especially when you're kind of getting into the weeds of recording mortgages.
This is AP Calc lending. This isn't, freshman geometry of lending.
This is your Ron Blaha BCHS Calc right
shout
here.
Out to
shout out.
Central.
All right. When we come back, I would like to talk about bankruptcies. Kind of an ugly topic, but important one to get specific on. You're listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Expert advice on buying a home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
All right, here at the Accunet Mortgage and Realty Show, talking good pre-approval and home purchase scenarios, and I'm going to take a sharp left turn and follow up a story Dad and I talked about last week about I think he called it the spoiler second mortgage.
Second mortgage.
And in that example, it was a borrower looking to refinance their first mortgage, and they had a second mortgage, a home equity line of credit that had a zero balance, and kind of talking them through like, okay, well, here's what happens if you leave it open. Here's what happens if you get it closed, if only because a second mortgage, when you slap on a second mortgage, creates more risk.
Correct.
Related,
even if it's at a zero balance currently.
Because it's about the possibility of borrowing against your home. And so, we're really good about talking through, in that example at least, hey, if you close your second home equity line of credit, hey, it's America. 2 months after you're done with the refinance of your first mortgage, there ain't nothing that we or Accunet or anybody can do to prevent you from opening a new second home equity line of credit. And so a version of that same story revolves around a customer that I had worked with recently who had gone through a bankruptcy. And when they went through this bankruptcy, a Chapter 7, which is a discharge of debts, as opposed to a Chapter 13, where you attempt to reduce your balances and get on a payment plan.
And pay those debts back over time.
Right. Yeah. And I should say, I am not an attorney. Please consult with one on those bankruptcy definitions. But for this borrower, during their Chapter 7, they had both a first and second mortgage. And well, if in a bankruptcy you say, I'm not paying any of it back, well, then your house is going to get foreclosed and you have to move out.
Right.
But you can reaffirm your mortgage as part of that bankruptcy proceeding so that you can continue to pay on that mortgage and remain in your home, if only because the bankruptcy courts want you to have some place to live. The interesting thing, though, about having both a first and second mortgage is that if you reaffirm your first mortgage, but do not reaffirm your second mortgage, the way that it feels in the completion of your bankruptcy is that I got rid of my second mortgage.
That second mortgage just went away. You don't have to pay on it
if only
anymore.
Because, I didn't reaffirm it. I reaffirmed my first mortgage, but I didn't reaffirm my second. And what about 9 out of 9 second mortgage holders do is they say, you know what, we are not going to come after you to get our money back. Because in order to do so, the second mortgage holder would have to pay off the first mortgage holder and
to go into first position.
Right. To come after the homeowner for funds that they're due. Most second lien holders are not going to do that. But what they will do is wait for the day when that second lien comes due, because they can remain as a lien holder against the house.
Right. And what would that scenario be, David, where the second lien holder, although they're not coming after the borrower for monthly repayment, what would be the scenario that would prompt that second lien holder to try to collect on that debt?
Well, so because the lien doesn't go away, let's say, for example, the day you're 7 years removed from your bankruptcy and you go to sell your home because you're going to move down to Florida because it's nice down there. The day will come where the title company will say, oh, I see we're paying off your first mortgage company. Also, you finally owe this money to this second mortgage holder.
Right.
And carved out of the proceeds then from the sale of your home, you will eventually, in my example, 7 years later, pay back the second mortgage holder. The other example of that is when you try to go to refinance. Because when we refinance, we are paying off
and replacing
the first mortgage. Yeah. When you pay off a first mortgage, anybody else who might owe money to on that home suddenly becomes in first position. And good title companies who do that search, like our friends at sister company Lakefront Title, shout out to President Sarah Wieseman, do every day, find at the Register of Deeds office, the county recorder's office, hey, this second mortgage is still there. And that can be the spoiler, hey, 7 years later, that like, oh yeah, I forgot or don't recall that I had this second mortgage at the time of my bankruptcy.
And it, when it happens, obviously we're not accusing anyone of trying to sweep this under the rug. We understand that it's
out of sight, out of mind.
When many years go by, I can't remember what I had for breakfast this morning, much less,
years and years ago.
A lien from 7 years ago when I filed for bankruptcy.
Yeah. A good reminder for us as practitioners of mortgage, but also for anyone who has gone through those bankruptcy proceedings, to help us help you as your mortgage doctors. Tell us all your symptoms, if only because we would like to be able to either help you pay the piper on that second mortgage if today is that day, because it ain't going away, and ultimately what we want to do is to be able to help people get to the game plan that they had in mind when they called us.
And the thing that Accunet can do that I think bigger companies are not as good at is we will consult to the absolute best of our abilities, and you are going to get a level of service and detail that David's going to talk about in the next segment.
Yes.
That is, I think, very special and unique compared to much larger lending companies.
Indeed. All right, with that, we'll take a break. You're listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Getting you into the home of your dreams. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
Welcome back to the last few minutes here of the Accunet Mortgage and Realty Show. Tim, it's been nice to be back in the saddle.
Great
you and
to
me.
Be back. Yeah,
young
it's always
guy,
a good time.
Young Cats Mortgage, Young Guns Mortgage. So as we left off in our last segment, if Brian had a secondary title after the Chief Honesty Officer, it would be the Chief Problem Solver.
He's got a lot of chief officer titles.
A lot of titles.
Yeah.
And he took a call this week on a referral from a real estate agent. And, part of what any loan consultant from Brian on down, any loan consultant at Accunet Mortgage does is we are translators of, in Dad's particular case, he took a call and someone trying to get from my old home to my new home. And kind of the first part of the conversation was, can you help me get a bridge loan? Well, the answer is yeah. Sure. But the second part, the follow-up question is, let's talk through what that means on a that's right. Just words.
Yeah, and you've said this to me before, Dave, is that when there are certain buzzwords that people say when they call in, which is really just they're just saying a word to convey an idea.
It's a synonym for help.
Yeah, like
help me.
I want a WIDA loan or I want a bridge loan. It's like, okay, well, that's good. tell me your situation and what you actually mean when you say those words, because it's different for different people.
And in this example, just to Quentin Tarantino, the end of this story, we're not going to be able to help this borrower, if only because Dad, and he knows what he's doing, was just like, well, I'm sorry, you don't have enough equity in your home to do a bridge loan. Here are some other ideas of how we could help
some
you.
Alternatives.
Get to that down payment amount. Do you have any family members that might be willing to provide you a gift? No. Okay. Do you happen to have any retirement savings, either a personal IRA or maybe a 401k? Hey, you might be able to take a loan out on your 401k
and this lady's
to temporarily. No, I would never do that. Okay. And so sometimes the best problem solvers are only as good at their craft as the patients that they're working with. So for anyone who's actually looking to collaborate on good problem solving, we're the best in the business. And I don't say that ironically. I say that sincerely. And
I've had other situations similar to Brian on the front lines where I've had these types of talks. And when I say that, this line to people, and this is not meant to be sassy at all, but I tell them, you don't have to do anything at all.
Right.
But we are absolutely going to do our best to give you all the options that we can think of. And if you want the house bad enough, or do you want to make this situation happen bad enough, odds are you're going to
where there's a will, there's a way.
You're going to take your pick and you're going to do something. But if you don't want it bad enough, then that's completely fine as well. You do not have to do any of the things we are suggesting.
Yeah. And so not only are we problem solvers on the front end of helping folks get into their new homes or a better situation, we're also problem solvers when things go sideways. And in particular, what is true about the benefit of being a local mortgage company is when things go sideways. It's kind of like life insurance. Like you don't really want it, but man, you're glad you've got it when you get clipped by a bus and your spouse has money to feed the kids for the next little while. And so the buck stops with Brian and the buck stops with David. And in particular, an example, Brian is going to be spending a little bit of time while he's in Florida calling 12 borrowers of Accunet's who the servicer that we had sent them to collect their monthly payments did not properly pay their property taxes on time before the end of this year. And at a big mortgage company with a skyscraper downtown, you are not going to get anything more than a sorry and good luck to you. But because we cheer for the green and gold and we live here and we care about how our customers experience their mortgage even after they're no longer talking to us on a monthly basis, Dad is calling these 12 people out of the hundreds upon hundreds upon hundreds of loans we did last year to personally apologize that these taxes weren't paid on time, and to, if there is a financial consequence, cut those people a check. Ultimately, it's probably not going to end up being a financial consequence, if only because you can talk to your tax person about standard deductions, and God bless you if you can itemize your property taxes. But the benefit is that the buck stops with Brian and the buck stops with David.
Yeah.
And so when things go bad, you have that resource. When you're looking for a great strategy on how to get into your next home, you have great problem solvers. And especially in a tight inventory market where there aren't enough good homes for sale, but there are a lot of hungry buyers, we're the cats to help you get into your next home. And the way that you're going to do that is by getting rock solid pre-approved by clicking on the blue button this week, maybe after the game today, but at least this week at Accunet.com. That is all the time that we have today for today's radio show. We'll be back in the saddle hopefully next week cheering on for another game.
Go Packers.
I'm David. That's Tim. Go Pack. You've been listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
The proceeding was a paid program. Advice and opinions expressed during the Accunet Mortgage and Realty Show are solely that of the hosts or guests of Accunet Mortgage and Accunet Realty Advisors, and not WTMJ Radio or Good Karma Brands Milwaukee, LLC.